Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of FHA Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about, can you really buy a home just using your tax refund in 2019? You most definitely can. The reason being is because there's so many programs that are out there, not just for first-time home buyers, but second, third, fourth, home buyers as well too. And there's a lot of different, grants that people are getting as well. And of course, there's three different types of grants that are available at minimum. The first type of grant is the ones that, that are out there via the state that you live in, okay? Like here in the state of Illinois, you can get a $7,500 grant, if you buy a house anywhere, in the state and you meet a certain amount of qualifications. Your debt to income has to be at a certain point, and then of course the credit score has to be at a certain point as well. And so these are grants that are available for you, of course, if you are living in the state. And a lot of states have something similar. So that's the first one. That's state-based money. The second one is going to be area-based money. So when you live in a certain area or you're looking to live in a certain area, usually going to be lower income areas, areas that need homeowners, not just renters. People are going to come out there and go cut the grass versus the landlord waiting to go cut the grass or whatever. And if they're trying to build up these neighborhoods, they're going to give neighborhood funding. These usually can either be added to the state money or it's going to be a lot more money. In the state of Illinois, there's grants you can get up to 20 grand just to buy in a certain type of neighborhood. But you better believe it's going to be a tough neighborhood, So, but again, that's area-based money. And not every area-based grant is going to be specifically on a lower income or I would say not the best neighborhood, but majority of them are, okay? So that's the second one, is going to be area-based money. Then the third one is going to be lender-based grants or lender-based money, okay? This is where you actually go directly with the lender. I have some deals under contract right now where the lender has their own down payment assistance program. You meet a certain qualification, there's no income caps, and you got to be flexible. Everyone doesn't have what I call the cookie cutter way of doing things. A 700 credit score, the $80,000 worth of income, that student loans are paid off, so that debt to income, so I mean, again, banks have to be flexible, and people are transitioning. So, people are going through job changes, people are just getting out of college, people are paying stuff off, but at the same time, they have personal things. They're getting married, they're having kids, someone just died in the family, so and there's a lot of things that go on, and banks have to be ready for it. So, using your tax refund, what does that come in? I'll give you an example that just happened to me recently. One of my clients, they were able to, we set the contract up a certain type of way, okay? So the purchase price of the home, let's say, was just say 150, okay? Because I'm going off memory. But this is essentially how it happened. The purchase price of the home was about 150,000, and then we got the seller to actually give us a certain amount of money in closing costs, okay? And the way that the lender, because this particular program was a lender-based buying program, okay? A lender-based grant, okay? The lender said, hey, I'm going to give you, I'm going to cover whatever, the seller, whatever the amount that's left over for closing costs. But at minimum, you need to get at least, if you buy a home, so there's a bracket. If you buy a house that's $150,000, we need you to get about $6,000 to $8,000 from the seller. Okay, great. So we worked out that contract, got about $8,000 just from the seller, okay? And then at that point, the lender says, hey, if you can come to the table with $3,000, we'll go ahead and cover the rest, okay? So 8 plus 3 is 11. Closing costs came out to about $14,000. So they covered the additional $3,000 that person needed. Now, this is this particular home. The number is going to be different for everybody. Some lenders don't cover that much. Every area is going to have a different amount of taxes. You may choose a different insurance plan. There's a lot of factors that can kind of go into it. This is going FHA as well, too. FHA is where you need 3.5%, down of, and that 3.5% is of the purchase price. If the purchase price is $100,000, then you only need $3,500. Okay, now that's just a down payment. Now what's due at closing includes that down payment, but also in closing is going to be a lot of fees. Your attorney fees, the title fees. Usually it's a year of insurance paid up, a year of taxes paid up. So there's a lot of numbers that are in that amount. Now when they get that amount, they say, okay, if you can get a certain amount from the seller, which is $8,000, now that $8,000 now brings that balance down. And then of course, the lender says, hey, if you could just bring 3, we'll bring the rest. And that makes a major difference for a lot of people. Now you're probably saying, well, Calvin, I don't get a tax refund. Well, you got to talk to a CPA, talk to an accountant. You can even, the people that do your taxes, they should be able to tell you why you aren't getting a refund. Keep in mind, it's not about just getting a refund when you do your taxes. Most people just want to break even. No, I don't know if you guys keep up with this type of stuff, but look at how much money Amazon just made last year versus how much they paid in taxes. For those who don't know, they made like 11 billion or something like that, and they paid 0 in taxes. Now, me personally, I don't see anything wrong with that. Why? Because they're providing jobs. Look at all the jobs that they're providing. And again, people have to either work for someone or they have to create their own, or you're going to, I guess, I don't know, position yourself to where you don't have to do either or, and someone just gives you the money, So since that's not less likely to happen, you have to do something for it. With that being the case, you have to say to yourself, okay, but again, most people, I won't say most people, but a lot of people get, refunds, whether that be $2,000, $3,000, $4,000, whatever. Some people are saying upwards of $10,000, $12,000 for a refund. What are you going to do with that? Are you going to continue to pay rent? Are you going to continue to keep throwing that money away? And again, now rent is not throwing away money for everybody. Some of you, so I won't say some of you, but some people are at an age where they're like, well, you know what? I just want to kind of bounce around. I just want to just be here for a year, be here for a year, be here for a year. I don't like this landlord. I'm gonna go somewhere else. I don't really have anyone necessarily taking care of me. I need to have that type of association type deal. So there's a lot of factors that kind of go into it, but you can do it. But you're probably going to need some type of program to cover the rest. That doesn't mean that you don't have the money. Let me say something to you guys. Just because you qualify for down payment assistance does not mean necessarily that you are broke or something like that, so because there's videos out here where people are telling people, they're advising them, well, if you could only buy a house with an FHA loan, you shouldn't buy a house. Why would you take that dream away from someone? First off, if you go back in time, you used to have to have 40 to 30% down just to buy a house. So clearly, it wasn't a money thing. They were trying to separate people because they knew who had that kind of money. Let's be honest. So now that people have the opportunity to do so, now we're telling them that they can't. So they should just keep throwing away money on rent when a home would make more sense to them. Let's be honest. Because again, that is a 30-year commitment, but you can always pay things off earlier. You can take that tax, once you think about it like this, you can take that tax refund, get the house, right? And then still keep getting a tax refund. Sometimes refunds go up just because you have a house, or if you have a building. Again, talk to a tax person if you want to list the specifics. But at the same time, when you are doing so, let's say you take that refund, you buy a house, let's say the refund stays the same. You could take that refund money and throw it towards your mortgage. You may cut off 5 years doing that. You may cut off 7 years doing something like that. Taking extra income, paying double. So again, now you have a place to live and you're living for free. You can turn a 30-year mortgage into a 15-year mortgage. You don't have to take a 30-year mortgage. So there's a lot of different things that you can do to finesse the system, but at the same time, you have an opportunity to do so. And if you have that tax refund, you have the income, make sure that credit is right. And if it's not, you can always call us. We can make sure that you're in position to buy a home. So if you like this video, like it, you want to share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you guys so much. Have a great day.